Hi guys and welcome back to the channel. So in today's video I will create an expert advisor that will be based on several moving averages, and yeah, it will be an interesting idea, I guess, because it's always interesting to try out different trading concepts. So yeah, it will be interesting today. Okay, so let me firstly explain basically the concept of the EA I will be making, and then I will start with the coding part. So as you can see on my screen, I have added multiple moving averages to my chart. Okay, so I will zoom in here and you can see that there are 1, 2, 3, 4 and 5 moving averages. This is moving average of length 10, 20, 30, 40 and 50. So basically the gap between these is like 10 candlesticks. Okay. So when it comes down to moving averages, there are multiple ways how to trade them. One of the ways is to basically use them for trend entries. Okay, so when the moving averages move in the same direction, either upwards or downwards, it basically means that there's a trend that is about to start or is already happening, and therefore you should trade with the trend. So that's the first way you can use moving averages. The second way, and it's also the way how I will use the moving averages today, is to basically go against the trend. Okay, so what I will be doing is that I will be checking all of these moving averages, and once they start moving in the same direction, so once basically something like this happens, I will go against the trend. So in this case, the moving averages start to move in the same direction upwards in a nice smooth movement. So what I will do is that when I detect something like this, I will open sell position. So I will go against the trend, and I will figure out the way of closing these positions later in the video. So far this is all I've got. Okay, so this is not something I've prepared before. This is just an idea that I've got right now, so I thought why not record it. So this is an instance of sell position. So let's say that, for example, EA detects that at this point the moving averages move nicely upwards. Yeah, all of them. So we would open sell position somewhere here, 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 and then basically we wait for the price to revert back. For the buy position is the same thing. So we are basically waiting for sell trend to happen. So for example, for something like this, and then once we detect this, we just keep opening buy positions. Of course, in this case, as you can see, we would lose a lot of capital. So that's something we have to keep in mind as well. Okay, so I will stop with this explanation part and I will move to the coding part. So let's go here. So this is my MT5 IDE. I will just find my YouTube folder, which is right here. I will create a new file, expert advisor template. Let's call this multiple MAEA. Okay, and let's add 5 parameters. Okay, so in this case I will create this EA for 5 moving averages. Of course, there's a way of doing this for any number of moving averages, so you can basically make this process dynamic, but in this video I will just stick to this way. Okay, so MA1, let me copy this here, paste it here. So MA2, this is going to be moving average 3, moving average 4 and moving average 5. So let's start with the values. So 10, this is going to be 20, this can be 30, this will be 40, and the last one will be 50. Okay, so these values can be changed in the inputs menu later. Click on next, next, and finish. Okay, so this is what we've got so far. I'll also check my options. Yeah, okay, so the size, size of the text should be okay. Okay, so now when dealing with moving averages, what we have to do obviously is to create handles for those moving averages. Okay, so we'll be working with built-in moving average functions in the MQL in MT5, so that's why we need handles. Of course, we can calculate moving averages without using built-in indicators, but why to do that? Okay, so let's create. So let's just call this handle 1, handle 2, handle 3, handle 4, and handle 5. So obviously handle 1 is for the moving average 1, handle 2 is for the moving average 2, and so on. So this is good. So now up here, because we are building an expert advisor, we have to include our trade/trade.mqh library. Yeah, so that's something we have to do every time. And then create an instance of this library called trade. The next thing we have to do is that we have to create global ask and bid prices variables. So ask variable will be used for storing the ask price, and bid variable will be used for storing the bid price. And I think we are good to go. So let's continue. So now on init function we will obviously assign the moving average indicators to the handles. Okay, so handle 1 is equal to IMA, for the current symbol, current period, moving average period will be equal to the MA1 period, shift is 0. Let's go for exponential moving averages, and price close. So now let's just take this line, copy it and paste it here 4 more times. So 2, here it's 3, 4, and 5, and the only thing we have to change is this parameter right here. Perfect. So this is also good. Okay, so now I will create a function which will be called the get moving average data. Okay, so in this function I will basically access the latest moving average values. Okay, so now before I do that, I have to think about a way of how I will basically detect the trend. Okay, so I have to come up with an idea of how I will be able to tell when the moving averages start to move in the same direction. Yeah, so the first thing that comes to my mind is to use correlation. So basically correlation correlation basically, or is correlation the best tool to use? Because basically what correlation does is that it tells you whether I will try to demonstrate it here on my chart. So basically if we, okay, so let's create an object. Okay, so let's just say, okay, so this is obviously, okay, my bad. Yeah, perfect. So let's just say that this is like that we divide these moving averages into these two rectangles. Okay, so this is the first rectangle with moving averages, this is the second rectangle. And what basically correlation does is that it tells us whether the moving averages from the first rectangle move in the same direction as the moving averages from the second rectangle, and vice versa. Okay, so this is basically what correlation tells us, and it doesn't tell us in which direction it moves. Okay, so for example in this case it could also tell us that the moving averages move together, because basically they move together, but as we can see this is not something we want to detect. So using correlation probably won't be the best idea. What we can do is that we can just simply check basically the price change for each of these moving averages. So for example, for this moving average, we would check this price being the current price, and then we would go back, for example, 10 candlesticks, and we would check this price right here. And if this current price is above this previous price, then we know that the price or the moving average value went up. Therefore, there is an uptrend, let's say. And if we check this for all of these moving averages as well, then we can, for example, then we know what's the overall trend. Okay, so I guess this could be a way of doing this. It's certainly not the best way to do this, but I think it's good enough for this video. Okay, so what I will do is that I will create a new input integer, and let's call this look back period, and let's say 20. Okay, so what will happen is that I will go back here. So saying, or this being the current price, I will go this number of candlesticks back, and I will check the price change. Okay, so I will go from here 20 candlesticks back, which is right here, and then I will basically check whether the moving average value went up or down, and based on this movement I will determine the trend of the moving average. So that's what I will do. Okay, so get moving average data. So now we obviously have to create some variables or arrays for storing the moving average data. Okay, so let's do this. So array 1, which will be for the moving average 1. Okay, and now I'll just copy this 4 more times, and I'll just change these names right here. Okay, so get moving average data. Okay, so now what I will simply do is that I will just call the copy buffer function, and I will do this for each of the handlers. So let's start with handle 1. So handle 1, buffer number is 0, starting position is 0, count. So count is equal to the look back period, and we will store this into array 1. Okay, and now let's do this and paste it here 4 more times, and just let's change these arrays in here, and we also have to change the handles. Okay, so handle 2, handle 3, 4, and 5. Okay, so far so good. So now basically we have this number of values for each of these moving averages, so we can work with it. Okay, so now what I will do is that I will say I will create an array called values change, okay, with the size of 5. Okay, so now what I will do is that I will do something like this. So values change at position 0 is equal to the array 1 at position so if you want to get the most recent value, we have to do look back period -1 minus the array 1 at position 0. So now we basically get the price change or the value change starting, for example, at this point and comparing it to the price somewhere here. Okay, so this is basically what I'm doing now. So this gives us the distance the moving average moved. If the distance will be positive, it means that the moving average went up. Okay, so uptrend. If the value will be negative, that means that the price went down. Okay, so downtrend. Okay, and now let's just do this for the rest of the moving averages as well. So 4, so 1, 2, 3, and 4, and just change these arrays, and the rest stays the same. So array 3, 4, Okay, array 4 and array 5 and array 5. Perfect. So now we basically have an array which is called values change, and in this array there are all of the price changes for the moving averages. So what we can do now is that we can do a lot of things. We can basically calculate the average change, and we can base it on average change. So if the average change is higher than 0, that means that there's an uptrend. If the average change is negative, then it means that there's a downtrend. But I won't be doing that. What I will do is that I will check whether all of these values are either positive or negative. So if all of these price changes are positive, that means that we are in an uptrend, and if all of these values are negative, then that means that we are in a downtrend. And if, for example, one of them is positive and 4 of them are negative, or vice versa, that means that there is no trend. Okay, so let's create a new variable called trend, which is initially set to 0. Okay. So now we will create a for loop. So for integer x equal to 0, x is lower than 5 and x plus plus. So now we basically have to check. Let's do it simple way, because there are multiple ways to do this. Let's just create a variable called positive equals to 0, negative equal to 0. Yeah, and now I will just check the value in each value in the values change array, and if that value is positive, I will increase the positive variable by 1. If it's negative, I will increase the negative variable by 1. So if values change at position x is higher than 0, then positive increased by 1. Else if values change at position x is below 0, that means that a negative is increased by 1. And if none of these options, or if none of these conditions are true, let's just do nothing happens. Okay, so this should be okay. And now we can simply say, so if positive is equal to 5 and negative is equal to 0, or we can just say negative is equal to 0, because in this case all of those values are positive, that means that trend is equal to 1. And else if positive is equal to 0, so that means that the trend is equal to, let's say, negative 1. And if this is not the case, then trend is equal to 0. Okay, so this is basically the way of getting the direction based on the moving averages. Okay, as I said before, there are multiple ways to do this. This is for sure not the best way. Yeah, you can do a lot of sophisticated calculations. Yeah, you can check a lot of things, but this is just something really simple, and I think it's good enough for this video. Perfect. So now we get our trend. On tick function, I will create my classic static integer last bar is equal to 0, integer bars is equal to I bars for the current symbol, current period, and if last bar is not equal to bars, then I will execute this thing. So last bar equal to bars and get moving average data. So this is basically me saying that this function will only execute once per new candlestick. So I won't execute it on every tick, but only once per new candlestick. Okay, so now let's try this, and let's just comment out the get moving average data. Okay, sorry, the trend. Okay, so let's just try this out to see how this works. Okay, so let's just open this right here. Let me just find the correct no, multiple moving average EA, so this should be it. And let's just check it. Okay, so you can see that we get I don't know if it's visible on your screen, but here is number 1, which corresponds to an uptrend. And if you check this, this is an uptrend. So the good thing is that it works in these types of scenarios. Okay, so it's still 1, and let's just wait for the change. Okay, and at this point it's 0. Okay, so this worked pretty well because it was able to identify basically this period right here to be an uptrend, which is which it were, and here it says sideways. Okay, so this looks pretty nice. So this was also an uptrend, so it's not ideal, as I said, and now it's -1. So at this point it basically says this is going down, and it's still a downtrend, and at this point it's sideways. Okay, so it's not bad. Yeah, it's not bad. It could be a lot worse, I would say. Okay, so let's continue. So now we will get to the part where we basically open positions. So I will create one more input variable, input integer, and this will be the distance entry bars, let's say 5. So what this means? Okay, so let's go back here and let me try to explain. So let's say that at this point we get a buy signal. So we get an uptrend signal. So we sell at this candlestick, and on this candlestick the signal will be pretty much the same. Okay, because yeah, the uptrend is still active. So normally what we would do is that we would also sell on this candlestick, and so on and so on and so on. Okay, but this basically puts us in a pretty high risk, let's say, because we would open a lot of positions over very short amount of time. So what I will do is that I will add this distance entry bars, which basically means that if I enter sell position here, then I have to wait 5 candlesticks until I can open a new sell position. So basically by doing this I can decrease the risk, okay, because I will decrease the number of positions I open. So 1, 2, 3, 4, 5. So then I would be allowed to open new sell position at this point. And then if I open it here, then I'm waiting 5 candlesticks again until I can sell, and so on. Okay, so you get the idea. And I am creating this as an input variable, so I am able to change this and optimize it later. Okay, so let's get to it. Okay, so I will create next static integer. So static integer last entry bar, which is equal to 0. Okay, so now I will say, so if trend is equal to 1 and last entry bar plus the, how did I call it, distance entry bars is lower than bars, okay, then open sell position. Okay, and I'll just copy this here, paste it here, do else if statement. So if trend is -1 and last entry bar is yeah, so this stays the same. Here I will open buy position. Okay, so pretty simple. So when I do this, the first thing I will do is that I will update the last entry bar to the current bars. Okay, so I just don't want to forget doing this later. Okay, so now we get to the main part. Right here on the global scope, what I will also do is that I will just update the ask and bid variables, so symbol info double for the current symbol, symbol ask, and bit variable is symbol info double, sorry, symbol bit. Okay, so now let's open those positions. So this is for cell position, so trade cell volume. Let's not worry about the volume right now, so 0.01 for the current symbol. It's bit price, and now because I haven't discussed the stop loss and take profit, I will put this as 0. Okay, so I am not assigning any stop losses or take profits to those positions for now, and command is null. And let's do the same thing for the buy position right here. Ask price. Perfect. Okay, so now I think it's a good time to discuss targets. So obviously, if you think about it, there's let me just check my camera if I'm centered. Am I centered? Okay, perfect. So there's one obvious way of setting stop loss. Okay, so basically here, if we open sell positions, a good way or a good thing to do would be to close these sell positions when there's a change of trend. So for example, if we sell positions right here, yeah, we would want to close these sell positions when the trend says that there is a sideways trend. Okay, so basically the uptrend ended. Okay, and we want to close these positions. On the other hand, this might not be the ideal thing of doing this, simply because as you can see, at this point we would close those positions too early. So we can hold them until a new sell trend occurs. Okay, so let's say that the new sell trend occurs somewhere here. So we would hold these sell positions until this point. And if we check the distance, yeah, let's say here this is difference of 500 points, so that's pretty significant. So this is what I will do. Okay, so this is what I will do, and I think this might work well. Okay, so I will create new function. So let's say closing positions. Okay, and what I will do is that I will simply say, so for integer x is equal to 0, x is over in positions total. So now I am just looping through all of those open positions, and for each of these positions I get some information. So first is ticket, the second is type. Sorry, because my keyboard is right under the microphone, so I don't see it properly. So position get integer, yeah. Sorry. Current type, yeah. And this is probably all we need now. So let's do the if else statement. So if the current trend is equal to -1, therefore we have sell positions, and type is equal to 1, which is basically type of sell positions, then we want to close these positions, I guess. Position close for the ticket and -1 for deviation. And else if trend is equal to 1 and type is equal to 0, yeah, so this is basically me doing the same thing for the buy positions, then we do it like this. So yeah, I guess this is a very simple way of handling this, but it should work. So closing positions, and I basically call this function, let's put it here, so it's just more clear where we call the function. So basically I execute this function on every tick, okay? So not once per every bar, but on every tick, which basically should not make a difference since we are updating the trend variable on every bar. So let's do it like this. Okay, so this was my mistake. I wasn't thinking. Okay, so this should work. So let's check it. Okay, so here you can see that this works pretty well. So we get our sell position, and then 5 candlesticks later, so 1, 2, 3, 4, 5, okay, and then on the 6th we open next sell position, and that's it. So far this does exactly what we wanted it to do. I will just decrease the speed here, so maybe increase it a bit. Yeah, and you can see that basically when doing this we open less positions, therefore the overall risk is smaller. So now we are waiting for the trend to change, and it did change at this point, and there's one thing I should do. So basically those positions did not close at the same price level. So what I will do is that I will create a new for loop, and I'll just execute this loop 10 times. Okay, so this will take care of this issue for me. So I will do this, I will do this thing, and it should solve the issue. So let's run this once again. So now we are just opening those sell positions, so nothing new. Okay, and did we close? Yeah, we closed all these positions at the same moment, so this is a good thing. And we made some money, so that's also nice. Okay, so now for the buy positions. Okay. And we also close these buy positions in profit. Perfect. So yeah, like this doesn't seem as that bad idea. It will be interesting to see how this works in this type of scenarios where basically we go, something like this happens, so there's like this huge dip to the opposite side, but so far it seems like this is not that bad. Okay, so we can see that it works as it should be working, and this doesn't look that bad as well. I guess with more optimization, or with any optimization at all, because I haven't optimized this in any way so far, this doesn't look that bad. So there's one thing I will add to this, one more filter, okay, just to make this more secure, and it's going to be this thing. Okay, so here you can see that let's for example look at this. So we open this initial sell position, and then we open additional sell position which is above the previous sell position, which is okay. This is something I like. Okay, so then we do the same thing. So this sell position is above this sell position, and this one as well. Okay, so then we get here, and you can see that the price dips a little, and then we open additional sell position which is below the previous sell position, and the same thing happens here. Yeah, or these may be the same price levels, but you get the idea. And basically what this does is that then something like this happens, where basically the price continues to go up. Therefore these two sell positions just increase the overall risk. So what I will do is that I will also add a filter which basically will say that we can only open positions higher or on the higher price than the previous price. Okay, for sell positions, for buy positions, it's obviously below the previous buy position. Okay, so let's implement this. So for this I will need two variables. So last sell is equal to 0, last buy is equal to 0. Okay, so here what I will do is that I will update the last, did I call it last buy? Yeah, I did. Last, sorry, buy is equal to ask price, and last sell is equal to bid price. Perfect. So now we will just add this add a new condition. So this is for cell positions, therefore the bid price has to be above the last cell. Okay, and here I will put these quotes because there will be one more conditions for the buy side, and ask is below the last buy or the last buy is equal to 0. Okay, so this should take care of the issue, and here I just have to make sure that I basically reset the variables. So last cell is equal to 0, and here the same for the last buy, which is equal to 0 as well. So let's try this. Yeah, sorry, I forgot to open the visual mode. Okay, so now basically every cell position should be above the previous cell position, and yeah, from this we can see that this works well. Yeah, so this is something I like to see. And if we remember, somewhere in this zone we entered those cell positions below the previous cell position. So yeah, this works pretty nicely. Now I just want to see how it works basically. Okay, this is also okay. Okay, perfect. This is really nice. Yeah, so I am satisfied with this. It does exactly what I wanted it to do. Therefore, there's one more thing I will do in this video, and then it is that I will optimize it. Okay, it won't be any long optimization. I will just do a very simple one, just to see if like this can be more profitable. Okay, so let's optimize on GBP/USD. I think 2 last years is okay. So let's go here, genetic optimization, and let's I don't know, let's optimize these moving averages. Or do you know what? I will. Okay, let's optimize it. So for the first slow moving average, I will do something like. Oh, for the fast moving average, I will do something like this. For the second moving average, I will do something like this. For the third moving average, I will do something like this. Okay, so these are just values that I think might make sense. Okay, so if they don't make sense, I am sorry, but they should. Then the last moving average, let's go from 40, increase by 15, and let's do, I don't know, 300. Okay, so let's just test this out. Look back period. This will be very crucial value. So let's do something like this, and distance entry bars, let's do from 2 increase to, let's do 20. Okay, so this is very simple. I am running this on 1 minute HLC, so it will be pretty fast optimization. No agent is ready, so now it should be okay. And let's just see how this performs. Okay, so far we can see that there are some good combinations. So for example, sorry. Yeah, so for example, this seems pretty nice, but yeah, it's obviously not something extremely good. Yeah, but let's wait. Let's wait for a while, because the results may start to improve. Okay, let's finish this. So what do we have here? So when I sort this based on the best profit factor, this is the best result with profit factor of 156, which is not bad. So let's just test this. Yeah, so it obviously opens a lot of positions, as we can see here. Okay, so this is this is crazy, but yeah, based on this backtest, this might be working. So let's just test this on different time period. Okay, this is not bad. So let's do 216 to 224. Okay, so it doesn't perform that well, as we can see, but obviously from 2020 or from this point it starts to pick up, yeah, the results, and then it starts to work pretty well. So I don't know, let's try this for USD yen with the same optimization set just to see. Yeah, this seems pretty nice. Okay. And then something like this happens. Okay, so let's do one more quick optimization for USD yen, and then I will stop this video. How long is it? 41 minutes. Okay, so that's pretty long. Okay, so let's do one more optimization, and after that I will end this video. Okay, so we can see that for USD yen the profit factor is higher, which it doesn't mean that the EA performs more stable, yeah, on USD yen. It just means that it's more profitable. We also have to check the drawdown values, yeah, which are not bad, to be honest. Like with this number of positions, to have only drawdown of 11%, it's not bad. But of course we are using lot size of 0.01 on 10k account. Okay, so that's also something you have to put into a perspective here. Okay, so let's finish this and let's check the results. So this is something, yeah, like it's the same curve. It looks like this. It's not bad. Let's try this over the last 9 years, almost 10 years. Yeah, well, why not? Like, it's very simple EA. Obviously these huge losses, they mess up everything basically, but based on this EA, well, the thing I could add, or you can add to this, is like more sophisticated take profit and stop loss, okay? Because now it's just based on the change of the trend. So what we can, for example, do is that we can set stop loss to equity stop loss. So for example, when you lose 5% of the account, then it closes off those positions. Because here you can see that basically there are like these two huge dips which you would have avoided with equity stop loss, and then it could perform much better. And also for the take profit, you can set the take profit in points. So for example, when you add all of your positions in the cycle up, okay, so you take profit for each of those positions in the cycle, you add those profits, or you sum up these profits together. That can be, for example, something you can use for just take profit, but that's up to you. Anyway, thank you for watching, and I hope this was interesting to see. Yeah, so thank you for your time and have a nice day. Bye.